Good day, Miss Beauty. I am Riza Maykaniete, BSA 1A, and this is my assignment for assignment number 3, Banking. Banking has a long history, dating back to the medieval Europe where goldsmiths stored valuable commodities in the vaults for safekeeping. Over time, deposits increased, leading to the development of lending out money, which eventually led to the modern banking function. The era of unregulated banks was entrepreneurial with no licenses or regulation. This continued until the 1600s when banking became a big business with famous bankers like the Medici and Rothschild families becoming powerful. The rise of wildcat banks led to the birth of the banknotes, which were receipts or deposited gold. Unregulated banking led to the rise of wildcat banks that owned towns and cities of their savings. Central banks were created to prevent honest banks from losing business and bring order to the chaotic banking landscape. They were created by special grant by the government and became required to have licenses for banking business. The modern banking system has evolved significantly with the introduction of the fractional reserve system, which allows banks to maintain a smaller portion of their funds on deposit, allowing the rest to be used for lending. The central bank set the 10 amount, which is periodically adjusted to increase or decrease the money supply. This system has led to the trading of reserves in the interbank markets, indicating a shift from safekeeping to full reserve money lending. BSP or Bangko Sentral ng Pilipinas primary objectives is to maintain price stability conducive to balanced and sustainable economic growth. The BSP also aims to promote and preserve monetary stability and the convertibility of national currency. The BSP also provides policy directions in the area of money, banking, and credits, supervises operations of banks, and exercises regulatory powers over non-banking financial institutions with quasi-bank functions. Under the new central bank, the BSP performs the following functions, all of which relates to its status as a Republic Central Monetary Authority. First is the liquidity management. The BSP formulates and implements monetary policy aimed at influencing money supply consistent with its primary objectives to maintain price stability. Second is the currency issue. The BSP has the exclusive power to issue the national currency. All the notes and coins issued by the BSP are fully guaranteed by the government and are considered legal tender for all private and public debts. Lender of last resort. The BSP extends discounts, loans, and advances to banking institutions for liquidity purposes. Financial supervision. The BSP supervises banks and exercises regulatory powers over non-bank institutions performing quasi-banking functions. Management of foreign currencies reserves. The BSP seeks to maintain sufficient international reserves to meet any foreseeable net demands for foreign currencies in order to preserve the international stability and convertibility of the Philippine peso. Determination of exchange rate policy. The BSP determines the exchange rate policy of the Philippines. Currently, the BSP adheres to a market-oriented foreign exchange rate policy such that the role of Bangko Sentral is principally to ensure orderly conditions in the market. Other activities. The BSP functions as the banker, financial advisor, and official depository of the government, its political subdivisions and instrumentalities, and government-owned and controlled corporations. The Philippines banking system, BSP, oversees the banking system, which comprises universal and commercial banks, thrift banks, and rural cooperative banks. Universal banks are the largest financial institutions in the country, offering a range of banking services and engaging in underwriting and investment house functions. They can perform commercial banking functions such as accepting drafts, issuing letters of credit, and investing in allied enterprises. Thrift banks, including savings and mortgage bank, private development banks, stock savings and loan associations, and microfinance. Thrift banks provide short-term working capital and financing to businesses in the various sectors. with approval from the Monetary Board. They can open current or checking accounts, act as collection agents, and issue mortgage certificates. Rural and cooperative banks, organized by cooperatives or federations, provide basic financial services to the farmers in rural communities. In the Philippines, bank accounts are associated with depositing cash for savings and are connected to various products like credit cards, debit cards, loans, and investment accounts. They are secure and insured with the Philippine Deposit Insurance Corporation or PDIC for up to 500,000 pesos per depositor. Despite a good financial system, only 33% of adult Filipinos have bank accounts, indicating a need for saving and investing. Here are the different types of bank account in the Philippines. First is the saving account. Saving accounts are popular among Filipinos due to their low initial deposits and low maintaining balance. With an initial deposit of 200 pesos, these accounts are suitable for children, teenagers, and young professionals with stable income. However, they pay low interest, usually 1%, and may incur service charges if ATM facilities are used. Saving accounts and payroll accounts share similarities like ATM withdrawals and debit card facilities, but payroll accounts have no maintaining balance. ATM saving accounts have lower maintaining balance and initial deposit requirements compared to the passbook accounts. ATM accounts are preferred for easy access to funds using ATM or debit cards. Second is checking account. A checking account is a basic deposit account that requires a higher amount upon opening and maintains a higher balance than a saving account. It is suitable for individuals with businesses and regular cash flows such as revenue, expenses, amortization, and loans. Third is the time deposit account. Time deposit accounts pay higher interest than saving accounts, with interest rates usually higher than 1% in the Philippines. Early withdrawals can result in penalties, but the higher the deposit and the longer the account is held, the higher the interest earned. Fourth is the foreign currency account. Foreign currency accounts allow the depositors to withdraw money in peso or dollar, depending on the currency the account was opened in. These accounts allow depositors to increase their money by playing with currency rate differences. Most currency bank accounts in the Philippines come with a passbook and typically available in dominant currency like dollar, yen, pound, and yuan. Fifth is a joint account. Joint accounts are suitable for business partners, association, and couples for convenience and transparency in managing shared inflows and outflows. They can be saving account, checking account, or time deposit. Joint accounts come in two types, joint and joint or accounts. A joint and accounts need a signature of both account holders for withdrawals. On the other hand, a joint or account allows co-owners to withdraw anytime without the other person's signature. For savings deposit, only passbook or no ATM card is issued for and accounts, while for or accounts, an ATM or passbook may be provided. Services offered by bank. In the modern world, bank offers a variety of services to attract customers. Some of the basic modern services offered by the banks are discussed in the following section. First is accepting deposit. Acceptance of deposits from depositors or clients is a primary function of a bank. Banks accept deposits from those who have money but cannot utilize it in profitable activities. People prefer to deposit their savings in a bank because by doing so, they earn interest at the same time they keep their money safe and insured. Second is the loan services. Banks generate revenue through the interest and profit through lending to the public. They lend excess deposit over the withdrawal and mandatory fractional reserves to borrowers and businessmen in need of cash on short, medium, and long-term basis. Third is the ATM services. ATM replace human bank tellers in performing basic banking functions such as deposits, withdrawals, account inquiries. Key advantages of ATMs include 24-hour availability, elimination of labor costs, convenience of location. Fourth is a bank guarantee. Customers are provided the facility of bank guarantee by modern commercial banks. When customers have to deposit certain funds in the governmental offices or courts for a specific purpose, a bank can present itself as a guarantee for the customer. Fifth is a check payment. Bank provides checkbooks to the checking account holders. Account banks pay holders can draw check upon the bank to pay money. Customers after formal verification and official procedures. Six is collection and payment agreement. In modern business, different types of credit instruments such as the bill of exchange, promissory notes, and checks are used. Banks deal with these instruments by collecting and paying different types of credit instruments as a representative for the customers. 7 is consultancy. Modern commercial banks is expanding their functions to the consultancy business. In this function, banks hire financial, legal, and market experts who provide advices to the customers regarding investment, industry, trade, income, tax, and other issues of financial concerns. Credit cards. Credit cards enable holders to make purchases on credit, with the provider paying immediately and cardholder promising to repay full amount over time with the interest if not paid. Ninth is the debit cards. Modern ATMs now are functioning as debit cards. Debit cards are used to electronically withdraw funds directly from the cardholder's account. Most debit cards require a personal identification number or PIN to be used to verify the transaction. 10th, discounting of bills of exchange. Discounting is a popular lending method used by modern banks to discount a bill of exchange, allowing holders to receive less than the original amount after making marginal deductions. These methods allow for immediate or set payment of goods or services, with the bank receiving payments when the bill matures. Bank organizational structure. Banks provide financial products and services to clients in exchange for interest and fees. Banking executives must have knowledge for finance and monetary instruments to make sound decisions based on capital adequacy, asset management, and interest rate risk. A strong organizational structure helps the bank thrive while offering various financial services. Executives. Executives in the bank oversees specific business areas, such as community banking, consumer lending, wealth management, and day-to-day operations. They work closely with the board of directors and focus on local branches, personal and family loans, tax, estate planning, and investing advice. Directors. Executives typically have a small team of senior directors to manage business functions. In community banking, a senior leader manages product distribution and business development. Consumer lending oversight is divided into various services, while commercial lending focuses on small startups and larger corporate clients. Wealth management groups branches into trust services and asset management. The department managers. Directors define business unit direction and objectives, while the managers implement them. Community banking has executives and directors, while consumers lending assigning overseers for credit management, direct consumer loans, and home equity loan functions. Commercial banking has managers for global transactions and corporate portfolio management, while wealth management divisions divides planning services in the securities, mutual funds, and communities departments. Bank staff. Bank staff, including human resource representatives, customer service representatives, and sales, are crucial to the company's front lines and represents the companies to clients and potential employees. Community banks may have more frontline staff, including tellers and personal bankers.